Hello and a very warm welcome. Today we're taking a look at a really fascinating and fast-growing part of the UK property market, Islamic mortgages. Now this entire analysis has been developed by the experts over at Shariah-compliant, giving us a fantastic look at the outlook for 2026.
So let's jump right in with a big question for you. Could your next mortgage actually be interest-free? Now, hold on, because whether you're familiar with Sharia-compliant finance or not, the ideas behind it are really starting to influence the future of ethical investment right here in the UK. So you're going to want to stick with me on this one.
For so many of us, owning our own home is a huge part of life in Britain, isn't it? It's all about putting down roots and building a secure future. But for a significant part of the community, this classic British dream creates a really tough financial and spiritual problem.
Let me paint a picture for you. Imagine Amina, a talented freelance graphic designer living in Manchester. She's done everything right. She's built her business, saved up a solid deposit, and she's ready to buy her first place. The only problem? As an observant Muslim, a standard mortgage that charges interest, known as riba, is simply not an option. It's against the core principles of her faith. And she's not alone. This is a real barrier to homeownership for a huge number of people in the UK's Muslim community.
So, what on earth is the alternative? Well, this isn't about finding some sort of clever loophole. It's about a totally different way of thinking about finance, a philosophy that's built from the ground up on one powerful idea: partnership.
At its core, Islamic home finance is actually pretty straightforward. Instead of a bank just lending you a huge chunk of money and then charging you interest, the bank acts as your partner. You both buy the property together. Then, over time, your monthly payments do two things. First, they cover rent for the part of the house the bank still owns, and second, they buy out more of the bank's share. So bit by bit, your ownership stake grows and the bank's shrinks, until the place is 100% yours. Simple as that.
And this slide really breaks down that fundamental difference. On the one hand, a conventional mortgage is all about a lender and a borrower. The bank's profit comes from interest, and pretty much all the risk, like if the property's value were to drop, falls on you. But on the other hand, with an Islamic mortgage, it's a partnership. The bank's profit comes from things like rent, and crucially, the risk is shared between both of you. It's a massive shift from just being in debt to having equity.
Okay, that all sounds pretty good, right? So you might be wondering, why isn't this more common? Well, this is where things get really, really interesting. Most people think they know what the biggest problem is, but what the industry experts say, well, it tells a completely different story.
For ages, the common belief has just been that Islamic mortgages are, well, more expensive. People assume the fees are higher, you need a bigger deposit, and the rates just aren't as good as what you'd find on the high street. But is that actually true? Is that what's really going on?
Now look at this. This quote is an absolute game changer. It's from a recent study in 2023, and they didn't just ask anyone on the street. They went straight to 144 qualified mortgage consultants, the people who are actually on the front lines arranging these deals. And what they found was crystal clear. Affordability is not the deal breaker we all thought it was. In fact, its impact was found to be statistically insignificant. Wow.
Okay, so if the experts themselves are telling us that cost isn't the main issue, that raises a pretty big question, doesn't it? What is holding this market back? Well, the answer comes down to two much deeper issues that are way more important for growth.
Right, so here they are. Number one, and this is the big one, is authenticity. People need to feel 100% confident that the product is genuinely Sharia compliant, not just in its name, but in its very DNA. That has the biggest impact of all. And coming in a close second is accessibility. I mean, can people even find these products easily? Are they simple to understand and apply for? These are the real hurdles that need to be cleared.
And on that note, here's a fantastic pro tip for you straight from the team at Pro Tax Accountant. Any legitimate Islamic finance provider will have what's called a Sharia Supervisory Board. This is basically a panel of respected scholars who have to approve every single product. So if a provider is totally open about who's on their board, that's a massive green flag for authenticity. Don't ever be afraid to ask about it.
So knowing that authenticity and accessibility are the real keys, what does the future actually hold? Well, despite those challenges, the outlook heading towards 2026 is looking incredibly bright. There are some really powerful things happening behind the scenes that are setting the stage for some serious growth.
Now, I know this sounds a bit technical, but please stick with me because this is a monumental deal. For the very first time, the Bank of England, the UK's central bank, has created a special system just for Islamic banks. In simple terms, it levels the playing field, giving them the same kind of stability tools that conventional banks have always had.
It's a huge vote of confidence from the highest level of the UK's financial system.
And what about the investment coming in? 93%. Just let that number sink in. That's the percentage of high net worth investors from the Gulf states, we're talking Saudi Arabia, Qatar, the UAE, who say their confidence in the UK property market is rising. They see the UK as stable and a great place for long-term growth, and they are actively looking for Sharia-compliant ways to invest here.
And you know, maybe the biggest push of all is the global move towards green and ethical finance. The whole world is shifting towards investments that are fair, transparent, and tied to real things, not just gambling on the markets. And guess what? The core principles of Islamic finance, shared risk, transparency, linking finance to actual assets, are exactly that. It's almost like the rest of the financial world is finally catching up to where Islamic finance has been all along.
So with all that said, what does this actually mean for you? If this idea of an interest-free partnership mortgage sounds interesting, what are the practical, real-world steps you should be thinking about?
Okay, first things first, do a bit of homework. There are a couple of different partnership models out there, so it's a good idea to get your head around the basics. Second, take a good look at your own finances, just like you would for any mortgage. But honestly, the most crucial step is number 3, talk to a specialist. This is a pretty unique area, and getting advice from someone who really lives and breathes this stuff is absolutely vital.
And that, of course, is where the experts who put this all together, Pro-Tax Accountant, come right in. They provide specialist advice on Islamic mortgages, they can guide you through the whole UK property tax system for 2026, and they can create a personalized financial plan just for you. All their contact details are right there on the screen, so feel free to reach out to them.
And just before we finish up, a quick but important disclaimer. All the information we've talked about today is for general guidance. It's not meant to be financial advice. Before you make any decisions, it's absolutely essential that you consult a professional expert like the team at Pro-Tax Accountant to get advice that's tailored specifically to you. Thanks so much for joining me today.